If you want 80% off all of my career guides, hit the first link in the video description below and you can get them all for 30 quid, saving you about £120. For those of you that have a spring week coming up or an internship, here's a quick little whistle stop tour on what is asset management. I've done a lot of these videos already, but the algorithm probably won't show you what I've made 2 or 3 years ago. So this is a quick little refresh. So we're gonna touch on what is asset management. So what is it? We're gonna touch on why are asset managers needed. We're gonna touch on the clients of asset managers, asset classes that asset managers can invest in, and then the biggest firms or the most common brands of asset managers. I'm gonna try and answer this like I'm doing a talk at university and people are sticking their hands up and asking questions, because that way, it's a little trick I've learned. That way, I talk to the camera like I'm talking to one of you, and it just flows a bit better rather than having some formal script and overthinking it. So with that, let's get straight into number 1. What is asset management? So asset management is basically managing the money of large institutions, so companies, pension funds, insurance companies, etc. These institutions have lots of money, right? And they don't know what to do with that money. So when you think of asset management, also interchangeable with fund management or investment management, it's basically taking that money and managing it for these clients. Because if you think of large companies like Apple, for example, they've got lots of money, right, sitting on their balance sheet. Let's not get technical. They've got lots of money. If that money just sits there, as time goes on, inflation tends to go up, right? Or the cost of living goes up, the cost of producing iPhones, etc. might go up. So if that money is just sitting there, it's going to lose value, right? And so that money needs to be invested. How are you going to make that money grow with inflation, or how are you going to preserve the value of that money? Typically, you would invest it into the financial markets, and that's where asset managers come in. You're basically managing money for large institutions so that you can help them preserve their capital or grow their capital. They might need more capital going forward, and so it will be your job as an asset manager to help them reach those goals. They might be a really risky investor who says to you, you know what, do what you want with my money, just make sure I get 10-20% returns. In which case you're going to invest, and I'll talk about asset classes in a bit. You're going to go crazy with the investments. Crazy, not really, but you know what I mean. Or they might be a charity or a more reserved investor or client, and so they might want not 5 or 10% returns. They might want something less or smaller because they don't want to risk losing too much capital. So asset management is needed because large institutions, governments, pension schemes, insurance companies, etc., they need money management services. Just like you and I, we've got money, we've got savings, for example, and in order to grow that, we might want to invest it in the financial markets. So asset management is basically that, but on a larger scale. All right, if you want to break into the industry and you want access to all 9 of my career guides, there are about 100 or so pages each on investment banking, sales and trading, asset management. Hit the first link in the video description below and use the code YouTube80 and you can get access to all of them for about £30. Number 3, who are the clients of asset managers? The clients of asset managers are large institutions. This could mean large companies, so companies that you and I use on a daily, like Apple, Microsoft, Google, Giant, the bike brand. I'm just looking at my bike, which is there. Bose, headphone brand, so on and so forth. All of these companies have lots of money that they need investing, so large companies. Pension funds, what's a pension fund? Most of these companies, or all of these companies, will have a pension scheme. So when their employees retire in 30, 40, 50 years, they can earn a pension or draw down their pension from these companies, right? They earn a salary when they retire, basically. Now, individuals, employees are putting money into their pension pots. Now, every month, they put a bit into their pot so it grows. So when they want to retire at 60, 65, probably 70 in a few years, they have a pot of money that they can withdraw. That pot of money is huge, right, today, and so it needs to grow in order to match the drawdown salaries of employees when they retire, and it also needs to preserve its value at the bare minimum. It can't be eroded by the cost of inflation or the rising cost of inflation, and so that money needs to be invested. So pension schemes or pension funds are clients of asset managers. Insurance companies as well. So when you are taking out a car, or when you're buying a car or financing a car, whatever it is, you need to do annual insurance in the UK anyway. And so if something happens to your car, you get an insurance payout, right? And it's kind of a bet. The insurance company bets that, you know, not everyone is going to ask for a payout at the same time. And individuals are required to take out this insurance in case something goes wrong. Whenever there needs to be a payout, you're covered, so you're safe. But this money that you give them, however much it is every month, the insurance company has tons of money from lots of different people paying them, and all that money, it's not just going to sit there because it's going to lose its value. So they need to give it to an asset manager to invest. So that's insurance clients. You've got sovereign wealth funds. So you've got foundations, charities, sovereign wealth funds, governments. All of these types of organizations have lots of money that needs investing in order to once again preserve its value or grow its value. So whenever you go to an asset management interview, try and get across the key point that you understand asset management exists in order to preserve or grow the value of capital on behalf of its clients. If you want to win brownie points at an interview or on your spring week or in your internship, get across the point of asset managers are a fiduciary. So fiduciary is basically like a trusted entity with someone's capital. So you have a fiduciary responsibility to serve your clients. So asset managers have a fiduciary responsibility. They're a trusted entity, and they have to be ethically and morally in line or aligned with the goals and objectives of their clients. Some of these key buzzwords, they stand out, so it's easy brownie points in interviews. All right, next point, asset classes. So asset classes are basically different areas of the financial markets that you can invest your money. The most common ones are fixed income. So it's kind of investing in debt products, mortgages, loans, bonds, etc. So it's debt. Typically, for the most part, it doesn't give you the highest level of return. It's pretty safe. It's slow and steady. It's safe returns over a long time. But there is a risky part within the debt markets, within fixed income. It's called high yield, and there's lots of other subsectors and stuff that is a bit more riskier debt. But we won't go into that. So the largest asset class, or the most popular asset class, is fixed income. Then you've got equities. Equities are basically stocks and shares, pieces of companies that you can invest in. Then you've got alternatives. So alternatives is a broad bucket. It's anything, broadly speaking, that isn't equities and fixed income. It's more like investing in hedge funds, investing in private equity, investing in venture capital, investing in cryptocurrencies, Bitcoin, etc. Alternatives tend to offer higher potential returns, but they tend to come with a lot more risk. Then you've got other things like quantitative strategies, or the quant asset class, which uses a lot more AI, machine learning, data, all of these things to invest and take advantage of the other asset classes. Then you've got multi-asset. So you've got an asset class that takes a bit of the others, combines them into a product, and you can invest your capital there. We've got quant, fixed income, equities, alternatives, multi-asset. I'm sure I'm missing one or two. Oh, there's real estate. There's money markets. Money markets are basically cash products. You're investing your money in cash products, and the primary purpose of that is because you get easy access to them quickly, compared to investing in fixed income, where your money might be tied up for a few years. If you invest in cash products, or if you invest your clients' capital into cash products, it means they can access that capital if they need it. So some clients might need access to their capital sooner or more frequently than others. And so one thing to note, different clients have different preferences when they invest. Pension funds, because they invest their money over a very long time horizon, they won't need that money until people retire, for example. They're going to invest with a very long-term time horizon. So they're going to traditionally put most of their money in fixed income and equities. And it depends, like if they, at the early stages, they might invest in more equities and less fixed income, and vice versa when it gets to the latter stages. So the mix always changes about, and they might have a small allocation to alternatives, etc. Insurance companies might have a different diversification mix. Sovereign wealth funds might be more riskier. They might invest more money in alternatives. So each client comes with a different set of preferences and goals in terms of how much money they want to make from their invested capital. And then last but not least, the biggest firms. So 3 types of firms to be aware of. You've got the pure play asset managers. So big firms like BlackRock, PIMCO, GAM, LGIM, Legal & General Investment Management, and so many others. These are just pure play asset managers. All they do is asset management. They don't do sales and trading. They don't do investment banking. They don't do, all the other stuff. They just do asset management. These are the biggest players. They tend to have most of the money, assets under management. That's what we call it. Then you've got the investment banks, the Goldman Sachs's, JP Morgan's, Morgan Stanley's, etc., which have within them, they've got an asset management division. Goldman's, for example, is focusing on its asset management business more than ever now, because it's got access to the private equity, real estate infrastructure and private credit investment classes as well, which bring in tons of money. So that's a big business, and it's stable and it drives returns when the investment banking and sales and trading division struggle sometimes. But this is a video for next time maybe. Then you've got the boutiques, so the pure play asset managers, but the smaller versions. So these are not as big as some of the brand names. These are smaller firms that might have a focus to specific asset classes only, or specific things like ESG or impact investing, or a number of different strategies or quant focused funds, etc. So those are the three main types of asset managers: the big pure play asset managers, the asset management divisions of investment banks, and then the boutique asset management firms. That's pretty much it. If you made it to the end, give the video a thumbs up, subscribe if you're new here. Most of you watching this are actually new. If you want 80% off career guides, first link in the video description, full details there. I'll see you in the next one. Peace.